Lockheed Martin is trading at around its all-time high after reporting Q3 numbers, completely ignoring the macroeconomic challenges most businesses are facing and actually are profiting from it. And the question investors have to ask themselves at this point is, how much higher are these defense stocks going to go, profiting off the backs of the war in Ukraine? And is this the time to step in and buy, or should we hold off and wait for a pullback? We'll answer all those questions and more on today's episode, as we'll talk about LMT, or Lockheed Martin's Q3 results. How's it going? Welcome to Everything Investing. Hope you're having a great day. We will be starting with the business overview, then jumping into the financials here. We'll talk about the top line, bottom line, etc. Finally, we'll conclude with an evaluation of this business using our intrinsic value calculator, which will let us know whether or not Lockheed Martin is a value investment or not. And if you like this kind of content, subscribe, because we post this kind of content on a weekly basis. Now, without further ado, let's jump into the video. So today we'll be talking about Lockheed Martin's Q3 results, and we'll start with the executives' comments here. We can see Lockheed Martin delivered a solid quarter as they were able to produce a strong free cash flow, more orders, and operating margins. They are positioned well to achieve their full year commitments. Always a great thing to see for a business. And because of their strong financial performance, they're able to invest further in their 21st century security technologies, which is ultimately going to benefit their business in the long run. And on top of all that, on October 18th, they announced an additional $14 billion share repurchase program in an attempt to reward shareholders along with their industry-leading dividend. Now, we'll touch on all that when we get to the free cash flow section. For now, let's look at what they've done historically in terms of top and bottom line. As you can see, and at least since 2013, we've had pretty linear growth here, continuously growing top line year over year over year. And in terms of their net income, they have been able to grow this as well over the past few years, and at least over the past decade or so. So that's great to see as well. Finally, we'll look at the return on invested capital. And at least since 2018, they've been able to produce about 15 to about 18% ROIC on an annual basis. So again, if you invest in this business, this is the type of return that you can expect. However, if it returns to a normalized basis, you can expect anywhere from 10% to about 15% ROIC for Lockheed Martin. Now let's do a quick walkthrough of the Q3 numbers. As you can see, across their four revenue segments here, they were able to produce about $16.5 billion in net sales, primarily in aeronautics, where they sell their fighter jets and such. And we can see the war in Ukraine definitely has helped with that, as more countries have taken order of their F-35 fighter jets. But anyways, after we deduct our expenses here, we're left with about $1.8 billion in operating profit. And once we make adjustments, it works out to be about $2.1 billion. So year over year, we can see they can consistently produce about $2 billion. And after the 9 months, or let's say 3 quarters, they're able to produce about $6 billion. So again, they're consistently producing about $2 billion each quarter, which is great for us investors because it allows us to be able to extrapolate that out over a given period of time and make estimations on this business, which we will be doing at the end of this video. Before that, let's take a quick look at their balance sheet. We can see here total cash of about $2.4 billion. Their balance sheet, they have about $11.5 billion in debt. So a net debt position of about $9.1 billion. It's not the worst thing ever, but we know that this is a stable business with stable margins, etc. So having a little bit of a net debt position can be overlooked in some situations, and I think this is one of them, especially when our equity is growing here. Now let's look at the cash return to shareholders. We can see free cash flow. They were able to produce about $2.7 billion in free cash flow just this quarter alone. That's amazing. And they've used up 76% of it on dividends and buybacks. If we look at this from a year-to-date perspective, they were able to produce about $5 billion almost in free cash flow. Again, splitting majority of it between dividends and share buybacks. So they're returning 121% of their free cash flow. Additionally, they just increased their dividend by 7%. So extremely committed on rewarding their shareholders. And if you were curious on what they do with the rest of their free cash flow, well, they're paying down their long-term debt. So they're lowering the debt to EBITDA ratio as well, ultimately improving the business and the bottom line. Now, because this business is buying back shares at such a high rate, we're not going to use the EPS figures here for our calculation because it wouldn't make as much sense, and that is something we're going to be changing on this channel. Instead, let's look at how much free cash flow they're able to produce on an annual basis. For 2022, they're looking at about $6 billion. So if we annualize this and assume that with the growth that they're going to have over the business over the next few years, they can produce, let's just call it $6.5 billion in free cash flow on an annual basis. And if we require a 10% return, they do currently pay a dividend as well. And if they're able to consistently grow this number at about 7% for the next 5 years, and then this drops down to, let's call it 4% on an average basis, and on a 20 PE, this stock should be worth about $144 billion. They're currently trading at a market cap of $119 billion. So even right now, this actually may be a great investment. Now let's look at this from the best case scenario. The war drags on. More countries actually want to purchase from Lockheed Martin, like Germany recently did with buying 35 F-35 fighter jets. We can estimate that they're able to grow at about 10% for the next 5 years. Then that drops down to, let's call it 6% on an average basis, and they're trading at a 26 PE like they currently are right now, we can estimate, again, this business should be worth about $207 billion in terms of total market cap. Again, we're looking at 119 right now. And then in the very worst case scenario, free cash flow stalls. The boost from the war in Ukraine is over. Sales start to decline a little bit. Their technology innovations don't work out the way they intended to. They're only able to grow at about 3% and then to 0% for the next 5 to 10 years on a 20 PE. The stock will be trading at about $108 billion in market cap, not far off from where we are right now. If we change the PE, it might look a little bit different. So we can say that for a margin of safety investment, this business would be worth about $92 billion. On a share by share basis, that would probably be in and around that $350 to $370, $80 price range. But ultimately, again, I think the investment thesis here for Lockheed Martin is, if you believe that the war on Ukraine will stall out, more countries will come in and start to purchase from Lockheed Martin. If you believe there will be more US government contracts in the future, etc., then this might be an amazing buy. Because as you can see, over the lifetime of this stock, we've seen nothing but a compounding stock here. They're also paying a dividend, so you're being rewarded on both ends there. And they're removing shares off the market, just to top it all off. But the risk here is not so much on competition as it is on being able to sustain this business and their business model, and being able to continue to produce more and more and innovate further. So please do your own research and due diligence on this stock, and let me know what your thoughts are in the comments below. That's my analysis for this video. If you made it this far to the video and you enjoyed, please leave a like and subscribe. It helps out greatly. And with that, I'll catch you on the next one.